Okay, I'm just welcome. This is Jimmy G. Just waiting for the rest of the viewers to connect. Let's see. Can you guys hear me okay or not? Okay, so this is a reintroduction into the Jimmy 8-way trading system. This is a version 1.0, 1.5. So basically, this is ways to trade the market, either if it's trending or ranging or doing certain things, then you can identify it in the market and then trade to that to one of these ways, right? So let me go over the indicators, right? So the indicators, the first part is the demand and supply zones. So the top part here, this is the supply zone, and the bottom part is the demand zones. So whenever a price is in the demand zone, it's most likely to go down, and when it's in the supply zones, it's most likely to go up. So these zones, once price like breaks them, they disappear. So you can see up here, this is a strong supply zone. So price will most likely drop. Here in the middle, this is my ladder. This is an EMA ladder. That means if price is like really below this ladder or above this ladder, that means it's going into a deep uptrend or downtrend. This system is based on the 50-minute time frame, and I'll go over ways in a minute once I explain the indicators. The next, these are arrows. These are based on the slower EMA 3 with fast 1. So it's just like a quick crossover. But you're not trading all these arrows. I'll explain how to trade these arrows later. Remember, these arrows do repaint, so you do need to leave the system on for maybe 2 hours before you trade, so you can get an idea of what's working at the moment. These dots here, these are your support and resistance lines. So the stronger the lines are, if it's been hit off a lot, then it's like a line that you could identify as being a support or resistance. Let's go over right here. This is like a bunch of mixed indicators to tell you if the price is overbought or oversold. So this is the blue line here. This is a CCI line, CCI2. The red line is overbought, it's called on balance volume. I just call it the OBV line. But this can tell you if it's overbought or oversold. And RSI, this is green dots. And next one is the money flow index. So whenever these all meet together, the red line including, that means it's definitely oversold. So you can see down here, it's definitely oversold, so it's most likely going to start going up. Or if it all meet together, like up here, price is going to start going down. This is a trend strength. The trend strength indicator, this shows you like big strengths in the trend, like when it's like pushing down a lot without coming back up. Like these ones here, these are pushed down very sudden. So this identifies the strength of a trend. So when nothing's appearing, this is like a weak trend. Like it's starting to range. This is like sudden appearance of a strong candle, and then it went weak and then strong again. This is just one of the indicators, and this is another overbought and oversold zones. These change, so sometimes the values vary. So this is quite accurate for a, more of an accurate overbought and oversold indicator than these ones. These are like a bunch of ones. Right. So let me go over. Let me just check any questions. Can everyone hear me okay? I think so. Right, so in the system, a lot of people have been using this system before, so they know, they're quite familiar with the system. But if you're not, this system is basically 8 ways to trade. So use money management on this system as well. Like if you do get like 2 out the monies, just stop trading, because some days the system is really, really good, and other days it's not. Like I remember one time we were in the Skype room and we had like 34 in the monies the whole day with Euro USD. Like every way was just working. And then we had like maybe 3 out the monies the whole day, and everyone was really had a good day. But then other days, and like there was one week and like almost every day we had 2 out the monies and it wasn't tradable. Hang on, people are talking. Meeting. Let me see. Yeah, it should be live. Right, so back to the system. So hide this part. Right, so the first way to trade, this is you need to make sure that the previous history that is actually ranging, not trending. So you can see if it's going up and down the ladder, or hitting a ladder and up and down, then you know that that's ranging. So you can use this way. But if it's like completely trending, like say like this, the GBP USD, this first way and second way, you can't trade it. This is another way you need to trade. So for the first way, what you need to do, we're waiting for the indicator to flash up, which is these red circles with the arrow inside, or the blue with the arrow inside, followed by the EMA arrow. So here, you would get this appear. Remember, this one does repaint, so it would probably appear here and here, but you wouldn't trade it until you see the arrow. So here it would appear, and then an arrow would appear in the next candle. You take a put for 15 minutes. You could wait for a pullback and then trade, but try to take it as soon as the arrow appears, or well after a little pullback. So this was in the money. Again, another blue arrow with a circle, and then EMA in the money again. Here, this was definitely ranging in its nice range. So again, appeared with the arrow in it, so you take it for this candle. So this is in the money again. You can see here again, it's in the money, but then it started to break out and over the ladder. So it started to bounce over the ladder. So you wouldn't trade this way anymore, because there would be these boxes coming up and telling you to trade it, but you wouldn't trade it anymore because it's broken out over the ladder. Or if it breaks out under the ladder, you don't trade it as well. Only when its prices keeps hitting the ladder up and down. So that's one way to trade. Like this text document is supplied in the system as well. So the second way is overbought and valued way. So you can see when all these meet together, you can take a trade. So including the red line. So this one would be a valid trade, way up there. So you take a put in the money, and then you can see this would also appear, this box, and the arrow. So you take another one within the money. So this would be a double in the money. You would be taking both candles in this one. And whenever all these lines meet together, there's another one here. we all meet together, and then in the money slightly. And then so whenever we're meeting together, you can take the put. So here, slightly in the money again. That one was okay. That's the second way. So 2 ways to trade now. Right, the third way, you can look over this document later in the system, but this is just a video to give you an idea of how to trade. This is a VC custom alert. Whenever you see a green candle, for a put, whenever a green candle crosses this red line, followed by a red candle that's crossed this line too, then you can take a put for the next candle. So this, you can set this to alert as well, just in the settings. You can actually make an alert if you want, depends what's history doing, so you don't get confused with too many alerts. So a good example would be this one here. See the red hit here, and then it's followed by a green hit. So this would be a call and slightly in the money. You can wait for pullbacks as well, it's up to yourself. Let me see, can I see any more? Euro USD, it's more ranging. So here's one here. See, it was green, hit the red line, and then this one hit the red line too. So, and in the money. See this one red line hit, you wouldn't take a trade here. You know, you'd wait for the green, like a green wick to hit the line, or a green bar. Let's see, can I see another one? So this one, another example. The green hit over the red line, followed by a red. So it's basically two, this is your pattern, 2 of these, and then you take a put. So right here, you take a put, and in the money. Again here, green, red, in the money. This system worked very, very well last week. I didn't trade it myself, but if you did trade it, you would have got a lot of in the money. See this green bar way, way over, but then another red hit the line. So you could have traded this one as a put, or you could have waited for this one, and then both would be in the money. Also, you see that was the dynasty way as well, the first way to trade. So that would be in the money also. So that's like a double confirmation of both ways combined. And that one didn't quite touch that line. Maybe so this wouldn't be. You'd be very strict with yourself, you know. But even though you can see that's in the money, but be very strict to make sure that this line did touch. This one is another example. This one was an example of an out the money. You see here, hit the line, red hit the line. The next one was out the money. Remember, these setups are high probabilities, but it's not like 100%, but good percentage some days, like really good. Right, the next way to trade is the fourth way. This is a trending way, when it's above the ladder. So it needs to have at least 3 candles above or below the ladder without touching, including the wicks. Like if it's not touching, then you can trade these with that EMA arrows. So you can see here, it broke out of the ladder, and then 1, 2, 3. These 3 didn't touch the ladder, so this is a valid trade now. You're only taking it going down below the ladder. So this trade would be valid. You would get it here, you could wait for a pullback, but there was no pullback. So you could have missed this one, or you could have taken it right as soon as the arrow appeared. These arrows appear right after the candle expires. So this expires, and then you'll get an arrow right away with an alert. So this was in the money. And in this one, you would, even though you see that it was in the money, but you're not risking going up. You only because it's below the ladder. This one, another trade, it didn't reach the ladder. You can see this, didn't reach your ladder. So you'll be taking a put on this one. And this one, if you waited for a pullback, in the money, but if not, you took it right away, out the money. This one in the money, in the money. But oh, sorry. So this one touched the ladder. So this is a possible breakout of the ladder. So no trading when it's hitting this one. This is starting to range, but you wouldn't know that. So this is only if it's not none of these candles are touching the ladder. Right. So the fifth way is a bounce of the ladder. So we're looking for at least 2 bounces of this ladder, and then you're taking the trade when it for the next candle expiry. So this will be 2 candle expiry, current candle plus the expiry of the next candle. So it wasn't touching yet, so it did touch here, and then here. So this would be a clear out the money trade, which is a very good example. But it did it here. It bounced off again. So in this one, you would probably take it here for an expiry, but this was an out the money, unfortunately. But here, you know, this ladder, it's when one of these wicks appear into the ladder, you can't see it because it's like blocking it. So you don't know how high it was, but it doesn't really matter as long as. So this one probably was bouncing once, twice already, and then it'd be valid again. So here, it could have went up to here or whatever, but that was in the money. And then it bounced again, so you would take it another expiry for a put, and it was in the money. So it would already be dropped down, and down here, expire here, in the money. And then the next one, unfortunately, out the money. And then here's a few in the monies, depends where you took it. But you know, you don't need to trade this way if you're not comfortable with this way. This is just like bouncing off these EMA lines. Right, the sixth way is the breakout way. You know, these lines do create a support line. The blue lines are support, the red dots are the resistance. So if there's a serious breakout of the line, like when a candle closes out here, what you're going to do, you're going to wait till the candle closes, then you're going to wait for a pullback right to this line. Right, so you wouldn't be entering right away, you'd be waiting for the pullback. So you could draw a line, waiting for price to touch. This one didn't touch. And then you'd be waiting for a 2 candle expiry. So after this one, so the end of this one, so this was an in the money, but depends on the time. You could have been in money, or you might have missed this one, doesn't matter. But if it breaks out, so you can see here, this one, it broke out of this resistance. You need to make sure that this resistance line has been touched 2 times, like hit upon. So it's been hitting around here. So this definitely was a breakout. So here was a breakout of this line. You wait for the pullback, and in the money. You know, again, it's been bouncing off this area 1 time, 2 times, 3 times, and then it broke out. So you'd be waiting for a pullback. Unfortunately, it didn't hit, but don't worry about missed opportunities. Just keep yourself safe. So this was in the money if it touched, but it didn't. But this is the end of Friday, so I don't recommend this time to trade anyway. So that's another breakout. See, it was 1, 2, then breakout. You wait, didn't come back, so invalid. That's one way. Okay, next is the PP way. This is like quite a simple pattern with a very high probability. A lot of people in the Skype room really like this kind of way, because it's whenever I say PP way, people always like saying like they know it's going to be in the money. Well, high probability. 1 week I was back testing for 2 weeks, and I found 34 in the money and 2 out the money. So this one, this is like on the back tester, well, with a strategy tester. So the PP way, right? I don't think we had one in Euro USD. other ones, let me see. Give you an example. Right, here's a good one. Right, so using the trend strength, whenever you see a small bar followed by a big bar and then a small one after, you'll be trading a put. But these trend strength, the small bar would mean like a suddenly strength in the market in a trend, and then another one, but then you can see there was a rejection in this strength, like it started to get weak because this is a green bar, but this one was a red bar, a bear. So you know that's something up in the market. So you take a put here right away. So once you can see it's happened, you can take a put or wait for a pullback, whatever, and then you would take it for a 15-minute put or a 50-minute call. So this one was quite deep in the money. They're not very easy to spot, but if you do spot them when you're trading, take them. But remember, it has to be no other bars around. It has to just be a single 3-bar pattern. But you can notice that whenever you see like some big bar in the market, like this one, or this one. Yes, it's recorded. Yes. Yeah, whenever you see a big bar followed by a small bar, this means like it's like an exhaustion of this strength. So it starts to reverse. So you can just take a 50-minute put, and it reverses. Let me see. They're not very common. You won't see it all the time, but when you see it happening in the market, you see this is a break in here again. This was a good one. You see it pushed up and another bar, which is and it dropped smaller. So this green one matched with this bear. So it was a put and in the money. Pull back in the money. So remember, it's only a 3-bar pattern. Can't see anymore. Yep, there's one too. Here again, some strength in the market, which was this one. And then suddenly it got weak, and then weak again, and then in the money. So these patterns, these don't really repaint, but if these get stronger strengths, then these will start to shrink. But you can see here is another one. Suddenly, whenever you see a big candle, check the strength. Yep. So here's a big candle, and then this one was big again, and then suddenly you have the strength is getting weaker, like a big drop in the strength of a trend. And then there was a big candle, this is actually another kind of pattern, which I think Sam's going to teach you this some other time. This basically engulfed this candle, and then this was a pullback, and then in the money, or entered right away, still in the money. Very high probability these setups. Right, last way. Sure you've noticed there's like little happy faces. These pin bars. These pin bars. So these happy faces are recognized in pin bars in the market. So you don't take any of these happy face trades unless you're in the supply or demand zone. So this one, perfect example. This one came right here. You're going to take 2 candle expiry, 30-minute trade as soon as this finishes. So bam, in the money. Also seen the first way also. So you could have taken a second entry here as well, in the money, for a double in the money. Let's see if I can see any more. So these pin bars, I've made certain settings to identify some pin bars. Like sometimes this pin bar, I don't like this pin bar because it doesn't meet my requirements. So you won't see a happy face. But if it meets my requirements, that means if it's happened like suddenly a push in the market and then it's been rejected, then this symbol will happen. You know, I've made sure this the settings are identifying good pin bars, but make sure that it's at the top of the market or the bottom. So if it was to appear like here, don't take it. You know, you'd have to wait for it to be high in the supply or demand zone. Let me see, can I see any more examples? Right, so here is another example. So you'd have taken it, you could wait with pullback or taken it right away. So that could have been in the money or out the money, depends. If you waited for pullback, you know, when you wait for pullbacks, you sometimes do miss opportunities, but sometimes it gives you good in the monies as well. Because you don't know the market. You know, you can either wait for good pullbacks or just enter right away. But remember, keep your money management secure. 2 out the monies, you're stopping. That's the same pair. Let's see, can't see any more. Yep, you see that pin bar, these pin bars happened, but you know it's in the middle of the zones, so you're not taking these ones. It needs to be the top of the zone, near the top or the bottom, like these ones, pin bars, but we're nowhere near your zones, so you're not taking these ones. Here, this was a one. There was like a supply zone before, but it's been broken, so it disappears. But before you would have seen that this was a zone and this a pin bar, so 2 candle expiry in the money. Sorry, Ernest, I'm on the 15-minute time frame. All these will be in the notes as well, so you can see. You can have a read over it as well. Or if you have any questions, you can feel free to ask me. I'll host another webinar once everyone starts using the system. If you have any questions, you can ask me. You can ask me in Facebook or chat or Skype, anywhere. Pin bar. So this is another one in the money from before. This one probably out the money. You know, it's not 100%. This one pull back in the money, or even 2 candle expiry in the money. The reason I do 2 bars instead of 1 bar, you can take 1 bar, but I feel that with my back testing, if you do 2 candle expiry, it's more likely to be in the money. So I would take 2 candles in these ones. Same with the ladder bounces, next candle expiry. Well, it's higher probability. Right, so I think that's everything. I don't think I've missed anything, but if you have any questions, feel free to ask me. Oh, yeah, so basically you keep all your pairs running that you want, and then if you see like if any like choppy markets, like if it's like something's ranging and something's trending, ranging, trending, then don't trade those pairs. And the ways you have to identify what's the market doing before you trade. So you can see here, USD Canada, this was definitely on a downtrend below the ladder. So you'd be only trading the EMAs, you know, bang in the money, here in the money, you don't trade that. Well, this is a overbought, oversold. So you could have done that. But anyway, trade safe and keep your money management smart. Right, so thank you everyone. It's Jimmy G from the Bull and Bear Traders. Don't forget to subscribe to the channel so you can see any more updates for any videos or any webinars. And that's it. Bye-bye.